Welcome to Trading Lounge and the US indices. We'll look at the SP 500 and the Nasdaq. And starting with the SP 500 here, we were looking at this move up through here in 5 waves. Our target was the 2,800, close to the 50 and the 60% retracement level. And yeah, well, that's been met, and now we're looking to the downside. So let's go in and have a look at the intraday counts, and then we can come back out and have a look at the daily and weekly possibilities for all of this. But before we go there, we know that this move up through here is corrective. We know the move down here was corrective. So even though that this was an impulse wave up through here in 5 waves, we know that it's part of the larger corrective rally here. So we should be seeing 5 waves to the downside here, and once we've got those 5 waves down, we'll look for a retracement level, and then we'll look for another 5 waves down into 3, 4 and 5 down through here. Don't worry about that number 4 there just yet. We're just focused on this particular impulse wave through here in 5 waves. Okay, so our target area for trading purposes is pretty much down at the 2,500, even though it will go lower, but we'll get a nice bounce from that level. There's a couple of other important numbers down through here. Obviously the 2,700 is important and the 2,600 is important, but I find the 2,650 more important. It's the halfway between what I call the medium level here, 2,500, and the minor level here, the 2,800. So it's significant. It becomes a bit of a balance point, so we'll be able to watch that. And also too, from wave B here to wave C, the 50-60% retracement level, which is roughly around where it is right now, will obviously play out and play into the 2,700. So the 61.8% and the 2,700 should hold the market there for a little bit and see a bit of a dance, but we'll still see further downside. So let's go in and have a look at the hourly chart for this current move down. Well, I don't have it labeled here, so but we can talk about it in terms of 1 and 2 here, and 1 and 2 and 3 and 4 and 5 here for the 3rd wave, the 4th wave here, and the 5th wave up until this point here. And we know that when we're working with the 2,800 or any particular large number, in this case it's a minor level 8, and then we have group 2 below that, and we have group 1 above that. Group 1 is 10, 20 and 30, and we know that if we found support on top of 30, it would sever the order flow from being pulled to the 800, and it will be pulled to the number 5 after that, 5 being the second strongest number. And same with the downside as well. Group 2 is support. If that fails at the 72 there, we've got 65, 72 and 80, then you should be short under group 2 here. So this is currently the 61.8% mark here, so we're going to see some consolidation in this area, but this particular trend down here is not complete. I could say that the move down here could be an A wave, a B wave and a C wave here. Because we've got 5 waves here, then we'd see a move up from here. So that's possible, but a little bit unlikely because of the bigger picture. So what we're looking for here is we're looking for 5 waves to the downside. So we'll go into our tick chart here, which is on 100 ticks. And as I mentioned, as an ABC correction to the 61.8%, which would be, well, in this case I've labelled it 1 and 2, and then 1, 2, 5 waves down here for the nice strong 3rd wave, 4th wave and 5th wave. So it's possible that it can be an A and a B and a C wave to here, and then we would go up from that point. We're expecting to move up here anyway into the wave 4, so I can put an A and a B and a C wave in here and to here. Or another way to look at this too, if I can just open this up a little bit here, is the 38.2% retracement level from the top of wave 2 to the low of wave 3 here. If that's actually complete, you can come back and do that. So in a nutshell, we're looking at the wave 4 of 1 lesser degree, which is always a reference point, and the 38.2% retracement level. So I would only treat this as a wave C here if we found support on 2750 here, the midpoint halfway between 2700 and 2800. So these are sub levels here, so 10, 20 and 30 make up group 1, and then we've got the midpoint, and then we've got 65, 72 and 80 in there. So it's good really. You can do this on Forex or any of the indices, breaking every 100 points down into 1, 2 and 3, 5 and 8. Well, with 8 we've got group 2 here, so 72 and 65. It's a little bit more sophisticated in this area here, but these are basically the Fibonacci numbers rating up the price here. So we're using the Fibo numbers as a price ratio. So yeah, let's see how we go. So we're looking for 5 waves between wave 4 and wave 5 here, and we know that this is at the 61.8% retracement level of the previous trend here. So we're going to expect a bounce here and then another wave down. If we get this 5 waves down here, like 3, an A and a B and a C for 4 here, and then down for 5 here, so we'll see Thursday's a rally, and then we'll see Friday and Monday continue to the downside. But if we get these 5 waves I mentioned, 1 and 2 and 3 and 4 and 5 down here, then we've got ourselves a bear market. So that bear market would help confirm, if I can go back to the 4-hour chart here, it would help confirm this move down here as being 1, 2, 3, 4, 5 here for wave 1, and then back for wave 2, and then down again. Don't feel like you're missing anything, because you're not. We're just confirming things. So this ABC across here, an A and a B and a C up here, that should be rather sharp, being a wave 2, then we can look to short that. We can look to, we'll nail that price down, so we can short that. But also just seeing that 3-wave pattern there and drawing a line through it, and then selling on the breaching of that. Well, even trend lines here. I mean, we talk about the trading levels, horizontal levels here, and we talk about you know, support and resistance, going through those, how something actually migrates from one side to the other as such, and we talk about, you know, migrate, you know, these sorts of patterns. It'll be the same with these as well. So when it hits the trend line, it bounces back, then it moves through. Whoops a daisy, bit of a drunken sailor there. So just bring that, let's just delete that there. And so, because just, I mean, it's a very simple thing, but it's good to know. So with the trend lines, the market will come down, bounce off it, bounce back, then move through, and then come back and retest the supply sellers, and then drop. Now and again, you will get an off and second retest depending on the count. So you always got to be mindful of that with the stops, okay? But we'll get to this. We'll nail that down. But just want to point out the bigger picture of wave 1 and 2. So this 1 and 2 here will be really nice setup for this 3rd wave moving down here. And even when we look for the 61.8% up here retracement level, we need to be a little bit mindful that it may not reach that there either. So it'll be very important for us to count the 5 waves up here, the 3 waves here, and the 5 waves in this space here. So we're on the tick chart here at the moment. So I just want to check on a few things. We're on 100 ticks here. I'm just going to go down to, I just use a side chart here with 20 ticks on it, just to really drill into wave structures. So I know I've got 1 and 2 and 1 and 2, a nice strong 3rd wave here, 4th wave and 5th wave here. So let me just, we're pretty close. I can see in this, from this wave, this wave 4 here. So we're on 20 ticks now, so we're kind of drilling right down into it. And this is the 61.8% right here. So we can see we've got 1 and 2, 3 and 4. So we know we've got wave 1 here and wave 2 here. So, I mean, I could count this as the 3rd wave here, but it's actually shorter than this one. But it's kind of okay in a way, because it makes this one here even, you know, just as short. So we're pretty close to a low here. Let me just think this out a little bit. 1, 2, 3, 4, 5, AB, or even part of 5 there. So, and 3, 4, 5. Yeah, look, I can't draw on this side of the tick chart, but we can have 1 and 2 and 3 and 4 and 5. So all of this can be the 3rd wave to here. That would make it a nice 3rd wave in comparison to wave 1 and 2 here. But still, that would only come back up to, if I can just squeeze that in there, so that would come back up to the 38.2% retracement level here. So we can still have one more little move down through here. Look, to be honest, it doesn't matter diddly squat at this particular point in time. with this because we're not that interested in it here, but a wave 4 here, and then I can't draw on this side of the price here, but we can get one more wave 5 coming here. Let's just see how we go with this, and if that is the low, then we're going to be pulling back to this low, this high here at 38.2% retracement level. So with all that in mind, we'll go back to the 4-hour chart here for a moment. And we don't need all of that. What happened to my 4-hour chart? It's a bit, oh, right. Sorry, it's not on this particular chart. It's on this one over here. Sorry. So back into the 4-hour chart here. So this is where we are. So I've labelled this here as an A wave here and a B wave over here, and then a C wave down here as wave 4. That may or may not be correct, because in the bigger picture we've got well, there's three wave counts that I can see. So let's just have a look at those, shall we? So okay, this is where you can start throwing tomatoes at me, and you'll have your own opinions as well, but the important thing about this is that sometimes because we're in a possible wave 4 here, things can get complicated. Okay, so we know that if wave 2 is simple, wave 4 can get complicated. So, and not that it really matters, because, you know, being an analyst is one thing, and being a trader and making money is a totally different thing. So what we just discussed just then was about trading, okay, but using analysis to get there. So this is analysis in the big picture, and it's not that helpful, you know, but what I can say here is what we're likely looking at here is we're either likely looking at, well, we're looking for a move down into the 2500 area here. But if I use, this is where we starts getting a little bit complicated, but I'll go through it. So right, so this is a running triangle. Okay, so from wave 3 here, we've got this trend line going through here. We've got this is the A wave here, all the way up for a B wave here, a C wave here, and then an A and a B and a C for the D here, and then we would see the E wave coming down here. Now the E wave coming down here would be in 3 waves like this here, and then we'd go up from that point. Okay, so that's one count. Okay, I'm just going to clear this up here a little bit. So it's possible, you know, because you have to put all the counts on the table and then eliminate them one by one. I don't know any other logical way to do it, but to stick your head in the sand and not look at the other ones, then you're not doing your job then. So the other count is that it's possible, as we've always said, we have to have wave 4 here and to have wave 5 over here. If that's the case, then I need to move these out of the way here. And then we'd need to look at this as wave 1 here and wave 2 here. And then we'd be looking at a big deep wave 3 here, and it would be coming down here anyway. Yeah, we'd have a top in place, so 3, 4, and then we get 5 waves up here, which should be basically all the way up to 1 here and back for 2 here and up for 3 here, back for 4 and up for 5 here. So it can be wave 1 and 2. So if you got that count, well, that's fine too, you know. So that's sitting there. Okay, so I'm just going to move my number 5 over here. I'll just leave that there, and my number 4 over here, and then we're going to look at something a little bit different here. So the other pattern that we can look at here is a little bit different. So it would have, if I can just remove the other pattern here, would be a W here, an A and a B and a C wave up here for the X, and down here for the Y here. and the Y would be the A wave here, the B wave here, and then the C wave coming down. Well, I should use smaller ones there. I'm always taking shortcuts, so A wave here, B wave here, and a C wave down here for Y of 4 here. So that's highly possible as well here. So they're the 3 counts. And yeah, I mean, that's just how it is. Okay, so let's just go back here for a moment to our 4-hour chart here, and we're looking for the wave C up here, and then I'm just going to go to the hourly chart here, and then this is where we were with the Nasdaq. So I'm just going to look at tech stocks here on this one here. So we were trading this up here. So from wave B here, we were looking to wave C, and we're looking for 5 waves up, same as the S&P. We're also left, I mean, we'd been trading short all the way down through here, and I was a bit lazy not going long above this one here, but at least we got out of our shorts at the right time. We got back into our longs over here. We also went long over here. We moved our stop up to here, up into break even, and we were looking at taking profit at the 7,000. It gapped open, so you should have been taking profit in this space here. Now, once again, I've been a little bit slack, and we haven't been short here either. So we just need to wait for this to play out here. So in a nutshell here, we've got wave 1 and 2. We're looking down for 3, 4, and 5 here, somewhere like this. So we're not going to do anything here for the time being. When we get our A wave and our B wave and our C wave pulling back up to here, then if I can just borrow this over here, copy that, put that through here, this is where we're going to be looking to go short. And also too, we'll look to go short right on the rally here as well in this space here when I can nail that price down in there as well. So we're going to be building the trade all the way through here. So yes, we have missed something, but this is the one that we really want coming down through here. This is going to be the stronger trend here. So going short in here is only going to get you trapped now. So if you're going to go short, then you should have been short under this low here, because that's a classic trading levels pattern. The arrival, the reaction, the first low, then the corrective pattern, and then down. So that's your reference point low here, just on the classic trading levels pattern on the short side of things here. So that's where we are. So yeah, alrighty. Thanks for tuning in. Much appreciated. Cheers.